Good morning, good afternoon, good evening. Welcome back to Dan's Trades. Appreciate you coming back out to the channel. Going to be doing a little narration over a trade that I took this morning. Got Camtasia running shortly after I entered it, so here we see there was a 1230 on the nuts, stab down below a new day opening gap, and then price closed back above it. We had a change in state of delivery, so I took the following candle's trade. Or I took an entry on the following candle. That's where we see the entry there. It's currently slightly in drawdown, 12 ticks. Stops at 28 ticks, targets at 33 ticks, so a little bit, not quite 2 to 1 or anything, but 1.5 to 1 risk to reward ratio there. Just looking for a quick scalp. Today is January 8th, 2025. It is Wednesday. It is also NFP week. And it is an unusual week because we have a former U.S. president who made it to the ripe old age of 100 years old, of Jimmy Carter, recently passed away. So they're having a day of mourning. So the markets are closed tomorrow. And on top of it, like I mentioned, it is NFP week. So I'm just going to do a quick narration over the trade I did. See, we have the quadrant levels put on a previous 5-minute chart. If I did not set it up to get the 50-minute chart top left, 5-minute chart bottom left, and the 1-minute chart is on the right side. I actually am doing this for a second time because I forgot to click recording on my microphone on the first narrate over, so this is the second take, so apologize if I say anything more than once because I forgot what I said the first time and what I've said on this one. So just looking for a setup. This one was based on a swing low right there we see on the 5-minute. So I'd like seeing that swing low there. Taking the trade right after close to maybe a turtle soup entry, but I'm not a turtle soup trader. If I get one, it's by luck. I don't plan for that ever. So here we see I debate on adding on, but I figure I'm just going to use the lowest leverage possible. I'm also over on the micros on the ES, since it is only the first and second weeks of January of the new year. Institutional money, institutional buyers aren't really participants yet, so it's mainly retail traders in there or in the market, so waiting for February to get back to standard risk parameters. So there we see a nice displacement through that fair value gap. The blue box is being drawn there, automated by a open high lows close tool from FX4 Living. Appreciate you for that. These automated tools are just fantastic for not having to always draw in. I will annotate along the way the ones that aren't drawn in front of the tool, just so you can see what's going through my brain as I manage this trade. Very short little scalp. Secondary lunch macro, basically looking at, we're in the noon hour. Typically the lunch macro attacks whoever's the winner in the morning. We had a run up and then a drop down, so a little bit of both sides. So just trading intraday volatility right now is what I'm looking at doing. Higher level time frame, yeah, we are bullish for a little while until expectations of a turnaround, and then displacement lower later in the year is what I'm currently expecting. We'll see what the first quarter brings. Just looking for the next quarterly market shift, keeping our eyes on that. But I do like just the shorter term trading where you almost don't even need a high time frame bias, but it helps if you are in alignment with it. That's for sure. All right, just slightly of the positive, just watching this trade. 1242. 1250 is going to be the next macro that kicks in. So we're positioned ahead of it right now, anticipating that to be a smart money reversal point and expecting price to go much higher. But I'm just going to take a small piece of it if it does. We're not looking to be greedy. Like seeing the higher lows and higher highs on the 1-minute charts. Potential swing low setting up on the 5-minute chart again. We have a low to the left, an up close candle that's currently trading right now. In 2 minutes that one will be closed. So here we have another fair value gap on the 1-minute chart, so we'll draw in the breakaway gap. So there's a bullish breakaway gap. Not anticipating price to return back down to it. And I just personally have the OHL subtool only showing the previous or the most recent PD array. So here's a anticipated inversion fair value gap. So that is a SIBI, but being inversion, I'm expecting it to be a bullish fair value gap. I want to see it trade up and through it, then use it as support. And there's actually a second one right below it. I believe I marked that one in as well. We've already traded through the second one, so excuse me, we've traded through the first one. Here it comes, I'll show you. So another SIBI right there. We've already traded right through it, and we see there is a layered PD array. We got the traditional breakaway, or excuse me, it is a breakaway gap right now. There's two breakaway gaps there right now. But we have a bullish fair value gap layered inside a bullish inversion fair value gap. So that's additional confluence with order blocks below, breakers inside there, all layering on the confluence of confidence in a long trade here. So just watching it play out. So just take some short little bites here and there. Not looking for anything crazy. 10 seconds to the next 15-minute candle, so that's very interesting. That's something that's going to be in place. So the 5-minute candle's closing, 15-minute candle's closing right now. So now we have on the top left two bearish fair value gaps that are drawn in, and we have the 5-minute stop just short of that inversion fair value gap anticipated. So it looks like it's acting as a traditional bearish fair value gap right now, and price could easily retrace 25 to 50% of that previous 5-minute candle. So I'm going to throw a fib on there to get a measurement if we don't displace immediately through. So I want to get some better views, go to full screen here, zoom in a little more on the 1 minute just to get some dialed in reading. We see we have not reached CE of that imbalance above in efficiency. So we're 2/3 of the way to the stop, so I move the stop to above break even a little bit early since I have the benefit of hindsight as I'm doing this voice narration. But I see we have so there's the retracement. I want to get a fib on this there. Let's put a fib on this 5-minute candle from the high to the low, and I'm going to watch and see how it reacts around the 25%, which is the upper quadrant, and then 50% right there, which is layered inside that inversion fair value gap. So multiple PD arrays looking to use for support, but I don't want to have my stop a little bit too close, so we'll see. And I'll give you a heads up, I do get stopped out. This is where people are going to think that their stops are targeted. The market does not see any one single trader. I mean, I can't prove that, but I don't believe they could, because that's just too much. But this is where it feels like it is. And this is a good feel for when you have a proper trade setup with the right framework, when you can take a re-entry after a stop that has a improper placement gets hit and taken out. So you get to watch that happen right here in the next couple minutes. And we're waiting for that 1250 macro to start too, is the other thing that's in the back of my mind. So now we're just about 2 minutes left to go. Two and a half on that 5-minute candle over. So we're halfway through that 5-minute candle. Zoom in a little bit closer again. I want to look at where is CE of that 5-minute candle, where is my stop in relation to the other PD arrays. Since we're not breaking through, we could easily come back down and get some more sell side liquidity, which is going to be below those two relative equal lows inside of that open right there. That tiny volume imbalance inside, that is bearish for the very short time frame. So I should have my stop below that inversion fair value gap, and even potentially still below that breakaway gap for multiple PD arrays, but I'd like how it reacted to the 50%, the consequent encroachment. So played to the bottom, so I'm not cutting it off yet, but I would like to see it trade above back above that lower quadrant like that and close above it. That's what I'd like to see. But we still got quite a few seconds on this minute candle. So we got a higher high on the 15-minute already, so we've tapped over that 15 minutes, so there is also the possibility that I could want to make a run. This is the third potential candle to make a 15-minute swing low, so I am definitely early. That's the part about whether you're trying to trade smart money reversals, first stage versus second stage, is you can have these retracements that come back against you. So I'm debating on closing it right there because I'm not seeing price trade back through that anticipated inversion fair value gap. It could still be going lower, so I'm debating on closing it. I don't like how the 1 minute chart isn't continuing to make higher highs. We're making lower lows. So this is short-term bearish, still potentially trading back down to 50% of that 5-minute chart. But I don't close it myself. I do try to just let the trade. Okay, it does take me out. There's a stop. And I see it's going to respect that breakaway gap, and I immediately re-enter, which I find interestingly enough, put the stop below the breakaway gap, put the target right back to exactly where it was before, and lo and behold, it's still exactly 33 ticks. So I had the exact same entry that I had before. I was stopped out, re-entered, all at the exact same price level of 59.25.50. So same risk management, actually less risk because I'm only using that breakaway gap. I don't have it down below that CE of that 5-minute wick where my original stop was. So now we're just looking for, now the macro has started. That's what that red pinkish shaded area is. That's the 1250. So we're in the first minute of the macro, and I like seeing that response to that immediate spooling north. I want to see that continue right up through that inversion fair value gap. Came down and claimed some sell side liquidity, but we're not closing above, so I'm keeping my eye on that upper quadrant level, and at any time I'd be perfectly content with just cutting the trade off early if it doesn't spool in the time I want to see it spool here in the next few minutes. So that's what I don't want to see. Debating on cutting it off. Closed right at the top of the fair value gap, and then we're respecting that, so let's see what happens here. It's a very bearish wick until we get back above it. There's no downside to that 1 minute chart, so price has not broken below back into that fair value gap. So that's a good sign until later when price wants to return back to it. Let's see what we do here. So 20 seconds. Sitting right into, oh, there's a little taps. Okay. Now we have an open high, tap a little bit lower. Looks like it might close right on it. 7, 6, 5, 4. Always watching the time. So it ended up being an open low high close, but it definitely fluctuated. So that's one thing you don't know until you're watching it live. So now we're seeing spooling happen. I like that. Just going to leave the stop where it is, anticipating it just blasting right through there and hitting the terminus, or my target. Could easily keep going farther up, but I'm only looking for a very short-term trade here. And I'll give you a heads up. We're going to close it out. This video is just about done, so I will say I appreciate anyone that's been watching more of the recent videos that are from ICT's Twitter Spaces that are outside of trading, but very important in my opinion. So if you're getting anything good out of that, appreciate that. So good to see and hear that. And remember, we'll just take the trade off right here, and then it's going to blast right through it. It's just tickling and playing, so let's just close it out just in case. And then remember, tomorrow is promised for none of us. Live for today. Take care. There's a boom.